as a new person that who has recently incorporated, they need to know. So once again, my name is Lakshay. Welcome once again for our Tuesday session. Today's topic is newly incorporated. Well, what are some of the mistakes that you want to avoid? So without further ado, let's get started. So today's agenda, I want to focus on a few things that are, a lot of the new. If you're an old business owner, you probably already know about this. But if you're a new business owner, these are some of the things that you want to avoid or keep a track of to avoid interest and penalties. So first off, we'll start off with the new tax deadlines, the PREC, its requirement, what are some of the mistakes to avoid, the different types of accounts like the RT, RP, and RC accounts, the importance of enrolling into CRA My Business account, as well as how you can take money out of your PREC. So first things first, I'm talking about personal real estate corporation. So once you have incorporated your business, your tax deadline kind of changes. Technically, if you're an individual who has been filing taxes as a sole proprietor, your tax deadline has always been April 30th, 2023. If you become self-employed or your wife is self-employed, then the tax deadline moves to June 15, 2023. So basically June 15th or April 30th has been your tax year end. But now that you have incorporated, your tax deadline has really changed. It basically depends on what year end did you pick. Most of the time people pick the calendar year as the year end, but let's assume for an accountant, myself, I know my Jan to April period is very busy. So I personally have picked June as the year end for my corporation. And after June's year end, I have 6 more months to file my taxes. So I pick my own year end and I have the ability to, navigate during the, busy season because it is not aligning to the calendar year. So something similar I would, recommend to you as well. If you're newly incorporated and, you have 2 corporations, one is a holding corporation, the other one is a corporation that you use for operating businesses, try to not align both of the year ends. Try to keep the year ends different for both of them because, eventually when you're filing your taxes at the end of the year, you don't want too much of a burden. So if you have incorporated, if you've kept Jan to December as your personal corporation's year end, you can basically, your tax deadline would be June 30th. So 6 months after the year end, after December 31. But if you have a HST is usually 3 months after the year end. That means if you have a December 31 year end, your HST filing is due by March 31st. Let's go to the next slide. So we all know everyone is now eligible to open a personal real estate corporation. Doctors, lawyers, accountants have this ability to incorporate from the past and enjoy lower tax rate. But with the, now with the changes in the system, you're not able to incorporate, you're now able to incorporate and enjoy the lower tax rate, which is 12.5% on first $500,000 of income. So if you were a sole proprietor, as your income increases, you pay more taxes. So most of the realtors, hang around the 100,000 mark, where the tax rate is 37.91%. If you're incorporated business, then of course you pay lower taxes, which is 12.2 to 12.5% on the first $500,000 of income. Very important to note. So one of the other things I wanted to mention is if you open a corporation for your PREC purposes, there are some requirements that you want to follow and make sure that you abide by. Number one is it has to be a provincial corporation, and all of the directors under the corporation, it could be anyone, but for a personal real estate corporation, the director needs to be the license holder as well. They must be a real estate agent or a broker or whatever it might be in terms of the real estate business. You cannot have your wife, your children as the directors, whereas other businesses like, where you have trucking businesses, IT professionals, you have the ability to add your family members as the director. But when you open a personal real estate corporation, that is a big no, and you cannot have that. So make sure to, keep that in mind. So you have 2 classes of shareholders and just like any business. Number one is the equity shareholders. Number two is preferred shareholders, which is the non-voting. The voting shareholders must be the salesperson, which is the broker of record. He or she must be the controlling shareholder, and they must be the president or the sole director of the corporations. So these are some of the conditions that you want to make sure your RICO, it is complying to the RICO. Whenever you incorporate, a lot of people ask me, can I use a federal corporation because it costs a little bit less? Can I have my family members as the director? The answer is no. You need to make sure that you are compliant with these RICO rules, because otherwise you won't be able to, function or operate successfully, because it would not be compliant. Like I said, if you want to involve your children, your spouse or your parents in the business, you can give them non-voting shares. They just cannot be the director. So if you want to involve them in one way or the other, you can have them as a non-voting shareholders. We have seen a couple of examples in the past where I compare the sole proprietor agent's income versus the PREC income. So here's another example just to give you a recap, that if you are earning $200,000 of income after same level of expenses as a PREC, your tax liability is much higher. I can also share the slideshow at the end of the day, and you can look back to it. But most of the people that are joined today, I'm pretty sure, have seen this example before. So I'll quickly use this example to refresh your memory. So let's assume you make $200,000 as a sole proprietor agent. After expenses, you're left with $145,000 of income. As a sole proprietor agent, we all know the higher you make, the more taxes you pay. That means your tax rate is 43%, and you pay $62,000 in taxes. Under the PREC model, you have $200,000 of income, same level of expenses as a sole proprietor, and your tax liability is much less. How? Because you're able to defer taxes by keeping most of the money in the corporation, whereas under the sole proprietor agent, as soon as you get paid, you have to pay taxes on it. Under the corporation, in this scenario, you withdrew for $45,000 of salary, and the remainder you left in the corporation. So on the $100,000 that you left in the corporation, you're only paying 12.2% taxes, which is $12,200. Whereas on the money that you withdrew, which is $45,000 in this case, you paid some 24% tax bracket, which is $10,000. So even if I add both the personal taxes and the corporate taxes, your tax liability compared to sole proprietor is far less, and you are paying only $39,000. You have a saving of $39,000 in this scenario. Some of the additional notes I wanted to mention about PREC is there might be additional insurance that you might be required to protect your assets when you open a PREC. A lot of people are wondering, how should I name my PREC? It can simply be your name, and the last word is PREC, Personal Real Estate Corporation. Once again, it could also be a numbered corporation, but keep in mind that later on, if you want to advertise or if you want to use it, and you don't want it to get confused with your other numbered companies, you can just add the name, and it doesn't cost much. Existing corporation can be converted into PREC. A lot of people ask me that, but you would need to change the directors. You need to have the direct and indirect shareholders must be aligned with the regulations. So you have to make sure that all of these are aligned before you finalize this. There can be passive investments that you can buy or purchase, but it is not advisable to hold properties under the PREC. I would recommend opening a holding corporation and then buying your assets under that, because this way you are protected when it comes to if someone was to sue you for for malpractice or your business services that they have received, at least your assets are kept in a different pool altogether, a different corporation, and it is protected. So once again, is PREC right for you? These are some of the questions that you would want to ask yourself. Are you making more than your daily living expenses? Do you want to save for retirement? Could you benefit distributing income to your family members, which are lower income family members in your, like you might have an 18-year-old kid, or you might have a wife who's not working. Can you split income with them and then minimize that? So that is something that you can clearly take an advantage of if you have a PREC. And once again, where are you in your professional journey? Once you answer all of these 4 questions, that's the time when you can really decide if you want to open a PREC or not. If you're confused, you can always book an appointment with your accountant or myself, and I'll be more than happy to help you make a decision. So a lot of the people have already opened a corporation. Now that you opened a corporation, you must be confused. What are some of the different types of taxes that you have to pay? So I'm going to break it down for you here. So as soon as you open a corporation, you have the numbered company name, you have the registered office address, and the business number. You will technically get a business number mailed to your official registered office address. So that comes in a paper mail. So you have to wait for that. As soon as you receive that, you have to file initial return in the first 60 days of incorporating your business. So make sure the initial return is filed. After that, you pick your year end, which is for HST filing as well as for corporate tax filing. Now, one of the key things that I wanted to mention is what does RP means? RP technically means for payroll account, RT means HST account, and RC means corporate tax account. These are the 3 accounts that are all associated to your business number. Just like we mentioned how your SIN number is associated with your personal tax information, similarly, you have the business number associated with your business, and all of these 3 accounts are related to that. Now that you have incorporated, how can you keep track of income and expenses? If it's your first year, I would recommend not using a bookkeeping software, but rather just using Excel to kind of keep track of your income and expenses. This is a great Excel screenshot that I've shared with you. It shows all of the different types of expenses that you can claim, whether it be commission rebates, real estate tuition courses, advertising, meals and entertainment, and so on. All of these are something that are deductible. You should keep receipts for them and make sure at the end of the year you provide all of this information to your accountant so they can prepare a consolidated income and expense summary for you in terms of when the time comes for preparing your taxes. A lot of the people have already signed for business accounts, right? You already have your CRA My account. So today I wanted to introduce, for most of you probably are familiar, but I wanted to again introduce you with CRA My business account. This looks a little bit different than your CRA My account. It basically keeps track of your HST, your corporate taxes, and your payroll account. So all 3 comes here. You can check all the correspondences from the CRA under the mail section, and you can keep track of how much is your taxes, how much was your income last year, and you can basically, it's a good portal to keep an eye out. If you haven't yet signed up for CRA My business account, I would highly recommend to do it, because at the end of the year, it'll save you a lot of time. It is same as CRA My account, but CRA My business account is actually meant for businesses. Now you must be wondering, what are the ID and password that you have to use in order to sign up for this? The cool part is the same ID that you had used to log into your CRA My account, you can use the same ID and password to sign up for CRA My business account. There's no a separate portal. You just basically Google sign into my CRA My business account, use the same CRA sign in and password that you had used for CRA My account, and it will give you access to your business as well. Once the PREC is open, now you must be wondering, all of the money that you were first making, it was all stuck inside the corporation. So how do I take money out of the corporation? Typically, you have a couple of options, right? You have the salary or you have the dividend that you can use to take money out of the corporation. Remember, salary, when you pay out yourself a salary, it works as an expense and it gets added to your personal income. So you pay taxes on your personal income there. The second option is paying yourself a dividend. In the dividend, it's a less expensive option because there's no CPP, there's no EI that you have to keep track of, and the income tax. You just straight write yourself a check. and the compliance is a lot less when it comes to paying a dividend rather than paying a monthly salary. So once again, this gets added to your personal income. And other things that you can use to pay from your prec is some of your vehicle expenses, whether it be fuel, meals and entertainment, or whether it be costs related to fixing up your vehicle. All of these are eligible deductible expenses, provided you use that card strictly for business use. It is used not for family gathering. It's mostly used to go to client meetings, go to your office, and basically go to attending pre-construction project meetings. And some of the other things that you can use is, beside the one that I had listed in the previous slide where there was a laundry list of expenses, you can use 15% of your home office expenses to be used. So right now I'm operating from a home office today. I'll basically calculate the home office expenses by dividing the square footage of the home office by the total square footage of the house. And then I'll, I have a percentage that I can times by the property taxes, the utilities, the internet, and anything that I use in the home to kind of, operate my office. One of the other things that I wanted to mention today is health savings account. Health savings account is something that is another way of using your corporation's money in order to, make to pay for your expenses related to your health. So, for example, a lot of you guys are realtors. As a realtor, we all know we don't have a medical plan or a dental plan from the business or from the employer, because we're independent contractor. So how can we, make sure that we can use the PREC money and deduct it from the corporation and use it towards our medical expenses that we might incur? You can open something called the health savings account, and this is technically 100% deductible for the employers, and it's 100% tax free to the employees. So from your corporation, you can keep, because you are from your corporation, you're an employee, you can offer yourself a health savings account option, which will allow you to claim expenses related to dental braces, physiotherapy, laser eye surgery, whereas regularly these expenses are not deductible from the business. Using this option, it will allow you to deduct most of the expenses and basically, help you keep track of how you can use the money from the corporation. So hope this helps. And before I wrap it up, one of the things that I wanted to, show you guys was related to payroll. So let me go back to the slideshow once again. And stop share here. So now you can see my second screen, and the second screen is technically showing you how to calculate your payroll taxes. Now, at the beginning of the year, what you want to do is you want to make sure that decide how much do you want to pay yourself. So my name is Lakshay, and I'm gonna, my employer name is my PREC, and my name is Lakshay, and because I'm paying myself from my own corporation, I can be EI exempt, and I need to pay myself a salary of $45,000. Pay period ending, I'm just gonna pick any month and try to calculate how much would be to run this payroll. Get date. Payment date. I don't know why it's not letting me.
So actually, just try to change the year because you're paying $45,000 towards you from your break, so it should be a yearly payroll, right?
Mm-hmm.
So you stayed on 20. Okay, now you're going with the 2021 or
Give me
22.
1 second.
So you have to go to 21 to 22.
Let's see. Province of Ontario. That's very weird. Payroll payment date. Okay. So in this scenario, sorry for that difference. So in this scenario, what I'm trying to show you is what is the cost of running payroll on a month-to-month basis if we are paying ourselves a $45,000 salary. Let me just keep it to calculator. I want to do $45,000 divided by 12, so 3750. All right. So in this scenario, what we're trying to achieve here is you have a $45,000 salary that is paid in a monthly installment of 3750. What are some of the total tax liability on a month-to-month basis? We all know, we all had employers before, right? We used to have gross earnings, and now after the deduction, we used to get paid the net pay in this scenario, which was 2996.66. So if you were to run a salary of 45,000 every month in a year, how much would be your monthly liability towards the payroll account, which is the RP account? So that is what I wanted to break down in this scenario. Your CPP contribution, which is employer and employee, is 5.45%. So total of 376. Your EI is basically technically supposed to be zero because when you are owner operated corporation, you cannot pay yourself EI, and you cannot claim EI benefits because technically you are self-employed. So in this scenario, you technically, let me just make you EI exempt and see if that will show up. EI exempt, recalculate, perfect. So now if you can see, there's a 376 that you need to pay from the CPP employer and employee contribution. And from the income tax standpoint, you need to pay 517 a month. To run a payroll of 45,000 a year, your tax liability on a month-to-month basis is 894. This is what I wanted to show you. A lot of the people wait till the end of the year for all of these deductions to accumulate, and then they ask me how much is the payroll liability. So if I do 894 times 12, it will be working out to $10,000 on a $45,000 salary, which is a lot to write a check for at the end of the year. So what I recommend my clients is to pay a monthly installment to the CRA for the for the monthly deduction. So just like if you were to work for an employer, they will not be paying you gross. They take the gross amount, they take the deductions to themselves, and they pay to the government on a month-to-month basis. Same scenario on a 3750 salary per month, you should technically be only be transferring $3,000 to your personal bank account, and the remainder difference need to go to the CRA on the month-to-month basis. Because you are a new PREC holder, a lot of you might be unaware of this, which is what I wanted to highlight here in today's presentation, to make sure your monthly payroll deductions are paid to the government on a month-to-month basis. A lot of the time, CRA allows you to pay on a quarterly basis instead of a monthly basis, but I always advise my clients to keep it in mind that at the end of the year, however money you take out from your corporation, you need to pay payroll taxes. And that payroll taxes is nothing but the difference between your gross earnings and the net pay, which is basically your CPP portion as well as the income tax portion. So that kind of wraps up my presentation for today. And I'll take you back to the actual slideshow. And if you have any questions, this would be the time. Thank you.
Hi, Lakshay. This is Devinder.
Hi.
I just want to know about our health saving account.
Mhm.
So that means we have to open a bank account for health saving purpose, and we can spend from that account. Is that way it will go?
No, so basically you need to contact your insurance broker, and whoever that insurance broker is would need to basically set you up for a something. It's like an insurance policy where you pay a premium to have the ability to deduct this. So they will open a health savings account for you. They will administer it through a Canadian, insurance company, and every month you're gonna have to basically pay for it out of your pocket. Or the second option is you don't pay for it on a month-to-month basis. You just accumulate all of your expenses. At the end of the year, you just do one-time claim through the health savings account. And what they do is they reimburse you for however much you had paid. So let's assume Devinder had dental braces that was not qualified medical expense, but using the health savings account, now he can make a claim to his corporation. The corporation will reimburse him for all of the dental costs that he has incurred and basically make it a qualified a deduction on the corporate taxes.
I think they charge maybe 10% for this service.
No, 2%. Who would pay 10%?
Okay. Okay, good to know. Thanks.
You're welcome.
Lakshay, another question.
Go ahead.
When you're moving your money from your PEG to your personal account,
Mhm.
How would you specify the salary or dividend? Like, what needs to be done to separate them?
So if you are enrolled, first of all, you need to open an RP account with your business number, which is your payroll account. The second step would be deciding how much your salary should be. In our scenario, I picked up $45,000 worth of salary, and it calculated CPP and income taxes of $800 approximately. So basically, on a month-to-month basis, you will write yourself a check for the net pay, and the remainder, which was the difference between the gross and then the net, you will actually remit that by the 15th of the following month to the government.
Right. And how does dividend work then?
Dividend would be the same thing, but in this scenario, it would most like it's not cyclical. Just like salary, it's like salary is more cyclical because it's monthly, bi-weekly. For a dividend, it could be, let's say, at the end of the year, Jaspal decides to withdraw 20,000. He'll just write himself a check of 20,000 and tell their accountant that, okay, I withdrew this. Can you classify this as dividend? Not much compliance need to happen, except that you would be issued a T5 instead of a T4 at the end of the year from your corporation. Again, accountant does that. From the business owner standpoint, you just write a check on the notes section, write paying dividend for year 2022.
Well, I haven't been consistent, so I just take up when needed, basically. So it's just a simple transfer. Not too much.
Yes, but what I would definitely recommend is still call me at the end of the presentation, because there's only a certain amount that you can take out as dividend. After that, it is not profitable to take out big amounts. So try to limit your dividend usage to a certain limit, because you might want to pay some payroll taxes. Yeah. No worries. Any other questions, guys?
Yeah, Akshay, this is Devinder again.
Yes.
So if we withdraw as a dividend, so in future you want a mortgage for house purpose, so do they consider as a regular income, or what kind of that?
No, so this is a very good point, Devinder. If Jaspal was to go for mortgage and tell them that he only has dividend income, he would not qualify for mortgage. In order to qualify for mortgage, they want not one time, quarterly, or abnormal payments. They want cyclical payments throughout the year, and only a salary works in that scenario. So they don't consider dividend as one of the income to qualify you for a mortgage. So very important to note that if you are going to be closing out on a property very soon, try to run a salary, even for a small amount, $30,000-$40,000 from your corporation, because it will help you qualify for the mortgage. Otherwise, it won't. Welcome. Chirag asked a question in terms of he already has a business account before he opened a PREC. Now he has opened a PREC. Does he need to open a new business account? The answer is yes. Before opening the PREC, you were using your personal account for the business purposes. You didn't have the requirement. But as soon as you incorporate, it is mandated that you need to open a new bank account because corporations are considered a separate legal entity.
Lakshya, I have a question regarding this mortgage point of view.
Correct.
Let's suppose the person have a T4 income and as well as an incorporation by the name of Quits in a PREC account, but not using any money to go to anything and not getting any income, no dividend, nothing. Still, we can show that money as a down payment or not?
You would need to withdraw that money from the corporation, right? As soon as you withdraw that money to make a down payment, it becomes your salary or dividend.
Yeah, for the next year, not for the same that particular year, right?
Yes.
All right. So, but still, we can show that down payment is coming from the corporation.
For sure. You can use the money, but of course, you would need to do some tax planning in terms of if you withdrew $120,000 in 1 year, you do not want to be paying taxes on that. That's not going to look pretty on the numbers.
Definitely, yes.
Right.
Perfect.
What I would recommend is almost year end, withdraw a few 10, 20,000 today, add it to your personal income, and another 20, 30,000 in January. So you got a split because every calendar year starts with a brand new. If you were to withdraw all in 1 year, your tax bracket would be very high. But thanks. Very good questions. We have less than a minute left. So thank you once again for joining in. Satpal, if you can, Sat Pabla has asked me to share today's presentation. If you can email me, I'll be more than happy to, reply back with the presentation. Thank you very much for joining in once again, and we'll see you next Tuesday. Take care.